Hi everyone, I'm Susan Smith, and in this week's episode we have a special guest that will be here to talk to us about mortgages. So hey everybody, this is John Stiles, and John, the reason I've asked you to be here today is I've been talking to a lot of first-time home buyers lately, and they've got questions about how to get a mortgage, how much money do they have for a down payment, just a lot of good things. And so I thought it'd be great just to get you here and make a video for them, and we can help a lot of people.
Sure. Well, thanks for having me. One of the biggest misconceptions I get when I talk to first-time home buyers is they all think that 20% down they have to have 20% down to be able to purchase, and that's just not the case. There are options out there from down payment assistance to first-time home buyer programs that offer either 100% financing or a very small down payment that they would certainly be hopefully open to, opposed to putting 10 or 20% down.
That's good, so they can keep some of their liquid assets for themselves and not just drain their bank accounts for down payment.
That's correct. And depending on so there's different options depending on where they're purchasing. If they're in the Charlotte area, we normally go with a first-time home buyer program. If they get outside the Charlotte area, maybe Fort Mill, Indian Land, we typically use a USDA option, which is 100% financing. So there are certainly options out there that would get away from that large down payment.
Okay, so when you say first-time homebuyer program, are you specifically talking like FHA loans, or are there other first-time homebuyer programs?
So there's actually, with the North Carolina Housing, which is one of the programs we use most of the time, you can actually go FHA or conventional.
Okay.
Again, the USDA option is also out there depending on where they're looking to purchase. That's 100% financing.
Mm-hmm.
But there is, if you go FHA, the minimum down payment is 3.5%. And
Okay.
there is a conventional option for first-time home buyers, which would actually be 3%.
Okay. So I know on FHA, isn't there a loan cap, like a ceiling?
There is. So the maximum loan amount for FHA as of this year is about $317,000.
Okay.
So that could potentially change going into 2020. We haven't gotten the updated loan amounts yet, but as of right now, it's right around that 317 mark.
Okay.
Yep.
So if we're dealing with clients that are, they've got great jobs and they're first-time home buyers and they're one of the lucky ones that are able to purchase a home that costs more than that, they would still qualify for first-time home buyer, but it would be conventional.
Correct. Yeah.
Okay.
Most people, if your credit's over 700, conventional is actually normally the better way to go, no matter what the price point's going to be.
Okay.
But that does offer the 3% option opposed
Oh.
to the 3.5% of FHA.
Okay, perfect. Well, bringing up the credit's a really great segue. I've also been asked things like, they don't really understand what is it that lenders are looking for and when they're qualifying a buyer. And specifically, can you explain like debt to income ratio? That seems to confuse a lot of people.
Sure. So the two biggest things that we look at when qualifying somebody is credit and income. And debt to income ratios is a big one as well. So depending on the program, FHA will actually go up to 50% on your debt to income ratios. That includes any of the existing debt you currently have. Now that debt is what's being reported to the credit bureaus. So your power bill, your cable bill, that we're not counting those payments into our ratios. It's more car payments, credit cards, student loans, things like that. But your current existing debts along with the new mortgage is going to be all calculated in, and it can go up to potentially 50% of your monthly gross income. So the income you're making prior to any deductions.
Okay.
Conventional, depending on credit, if you're over 700 on your credit, we can still go up to 50%. If you're below that, it would cap at 45.
Okay. So when someone's thinking about purchasing a house and they need to take that into consideration and maybe pay down some things before they start searching for a mortgage, if they're up in that higher threshold.
Absolutely. And a lot of times if you pay off loans, so let's say you have a $5,000 debt or a loan that's $300 a month for your payment, say it's a car payment. If you pay that loan off and use $5,000 towards paying your car off and you save $300 a month, that would benefit you a lot more than if you put $5,000 towards a house, because that's only going to save you about $25 to $30 a month. So you're getting a lot more benefit by paying that off than you would if you put it towards the house.
Okay. So then next question for you. If they're just thinking about buying, how far in advance do you think they should contact a mortgage person?
It depends on the situation, but if you can get 4 to 6 months out, that's probably ideal. What we normally try to do is at least run some numbers, get a scenario, so at least they have an idea of what they can qualify for and what a payment's going to look like.
Okay.
That'll also give them time to save some money if they need to, or pay off some debt. But at the very minimum, probably 90 days from when they want to purchase would be the ideal scenario.
Okay. Any other words of wisdom for a first-time home buyer?
No, I think that covers it. Like I said, there's a lot out there that people don't know about. So if they have any questions, certainly give me a call and I'm happy to go over it. So.
Okay. You want to tell them your email address?
Yep. So again, my name's John Stiles. Email is john.stiles, that's STILES, @allentate.com. My office number is 704-543-5851.
Okay. Thank you
Thank
very
you so much.
This is great.
Absolutely. Thank you.
Okay, so thanks for tuning in, everyone. If you like this video, please subscribe below. Give me comments. Let me know if there's any other topics that you'd like to hear about, and I am happy to get them out there for you. All right, I'll see you next time.